Welcome to the Full of Tracy Money Audio Commentary. This is Owen Tracy recording, and it's 4:32 p.m. that is Central Time, and today is July 22nd. Well, we've just had Google's earnings, and well, by any stretch of the imagination, they're very impressive. Cloud growth is spectacular, and I think the market was quibbling a little about the search revenue because it didn't quite come in at exactly what was expected. At 92 billion instead of 93 billion. But then listening to uh, the conference call, they're mentioning that it's up 70% on a year-over-year basis. I don't think anyone should be complaining about that. But I don't think that's really what the market is focused on when we're thinking about the share. It's really more about free cash flow. And that is where I think investors are probably focusing. On the one hand, you have free cash flow, which was growing from 60 to 73 billion between 22 and 2025. And now, in the last quarter, it was negative 5 billion. So they are just spending all the money they're making on the build out of AI. And they also acknowledge that there were some bottlenecks. So they are going to be renting some of the space from other providers while they're continuing to build out their own compute capacity. So what that really tells us is that they are going full throttle on integrating artificial intelligence into YouTube, into their search, and into everything regarding how they make money. And they are very clear in stating that it's helping to reduce the ad spend for their customers. In other words, the AI assisted engine for creating ads is reaching areas of the market that were previously unserved and also making it more effective for their customers to advertise in a more specific manner. So they're making more money by providing a better service to their customers. And that is very good news. So, regardless of how much money they're spending right now, the fact that they're able to generate a better service and serve their customers better, that's going to lock in those customers for the future. So, yes, Google is spending a lot of money, and in the future, it's going to be justified. But of course, what we've seen with the mega caps over the last while is that they underperformed because they were spending all this money, and the picks and shovels companies did spectacularly well because they were benefiting from all that spending. And the big